Hey folks, glad to be here. Hey. I think we're waiting for Joel. Everyone will be starting in a bit. Just waiting for Joel.
Joel is here.
Hey Joel.
Hey, hi, can you hear me?
Yeah.
Okay.
Yeah, we can hear you. All's good. Can see you as well now.
Okay, great.
Yeah. All right, folks. So yeah, very glad to have to put together this panel for Eternals. Eternals is the 7th edition of ETH India Online, continuing the legacy of the ETH India Onlines since 2018. And one of the mainstays since 2018 has definitely been DeFi, as we have seen some impressive protocols getting birthed at ETH India itself. The first ETH India had InstaDApp as one of the projects that had come in, and InstaDApp came from there. And since then, we have seen so many great DeFi projects coming off from ETH India itself, and then of course seen the space mature through the years. So very glad to welcome our panelists for today. So we have Chandresh Avar from Unilend. We have Joel from Ledger Prime. We have Francesco from Superfluid, and we also have Kyle from The Graph. Welcome to you all. Glad to have you here.
Thanks for having us.
Thanks for having us.
So what I plan to do today is that probably we can start off with introductions of all of you and speak a bit about how your work and your introduction to DeFi maybe, and then if you're currently working in DeFi, what excites you about the field. Right? So yeah, Kyle, would you like to take this up first?
Yeah, sure. So born and raised California, I went to the military for 12 years, made the transition by getting my MBA here in Houston, where I live now. And I was at Goldman Sachs for a little under 7 years. While at Goldman, I started out kind of as a volatility trader in late 16, then became a trader learner, then a trader learner heavy user of DeFi in general, just because I've always kind of been in love with the economics and incentive realm, and probably became a big true web believer in Web3 in general a couple years ago, maybe 2.5, 3 years ago. So once I didn't have my heart in Goldman, I knew I had to leave and finally cut the addiction to the institutional realm. And now I'm at Edge Node, which is a founding team behind the Graph, working on decentralizing data indexing and query layers to truly allow applications to be called decentralized, which is obviously very important for DeFi in general.
Yep. Nice to see how you've transitioned from TradFi to DeFi, as we go on, it would be nice to have your perspective on how you see things in the space, and especially what do you see specifically that's in an improvement for the masses in terms of what DeFi can do for them, right? But we'll come to that. Next up, I think we can hear from Chandresh.
Yeah, hey Danver, hey everyone. So I sort of started my journey with blockchain in the year 2016, I would say. So I, more joined as someone who was very keen on the work which was done in the Ethereum community. And, over the period of time, I realized, okay, something revolutionary is happening here. So, have been thinking how to contribute. So I was a computer science engineer by background, but then after that, I did my MBA. So I had more focus towards, on the business side of things. So sort of started taking efforts, building out the community majorly in India, writing some blogs, because at that time, the knowledge level and the material which one can refer to was very limited. So I started from that field, then got connected with a lot of different builders who were actively contributing in the space. And in that journey, I met Sandeep, who happened to be a super senior of my MBA college, and I sort of joined and worked for Matic, which is now Polygon, for more than a year, and I was leading their marketing and strategy. So while working with Matic, I realized that just how we are seeing that Ethereum is getting congested, gas fees is getting increased rapidly. So there is definitely a need of layer 2 solutions, and we saw that a lot of innovations were happening major, at that time it was mostly on the decentralized finance space. But over the period of time, we saw that how the traction came on gaming and everything. So I thought of we thought of building something for the masses. So we came up with the idea of a decentralized and permissionless money market. So just like Aave Compound, they support limited assets because there are a lot of different limitations to their model. So we came up with that idea and have been building for Uniland Finance since then.
Glad to know that, and yeah, definitely, as we go forward, like to hear more as well. I think we can hear from Francesco now.
Sure. Well, first of all, thanks for having me here. It's always great to speak at your ETH India events. Are always great. So I started my journey in 2017. I joined at the peak of the bull market, then faced a crash and stuck around. And I'm glad I did, because when people will notice that the bear markets are the best times to learn. I learned a lot. And then in 2019, started working in DeFi. And 2020, we founded Superfluid. Towards the end of 2020, we came out publicly. 2021, we launched Superfluid. And now 2022, literally just yesterday, we've deployed on layer 2s. So it's very exciting. We're growing very quickly, and it's very exciting to bring what we think is kind of, in a sense, the next generation of DeFi, but also more specifically, it's something people can use to improve their lives, right? Beyond just kind of speculation or yield, and bringing that to more and more people through these layer 2s. That's kind of where we're at now, and very excited to see if we can keep doing that in the future.
Yeah. Also, congrats on the launch. I think layer 2 is going to bring in a lot more people into the space now. And we will touch upon that. Would be interested to know all the insights that you have on that in particular. We can hear from Joel now. Joel.
Yeah. Hey, hi. Thanks for having me on. I've been in crypto since 2013. I was trying to create a remittance network on top of Bitcoin for low-income workers in the Middle East when I was in high school, and that's how I started getting into crypto. I was a little too early, so I had to stick with research and writing about how a bank could potentially be built on Bitcoin eventually. Worked formally with a fund called Outlier Ventures in 2017 on the research side. And then in 2020, I joined a hedge fund based out of New York called Ledger Prime. which is a multi-strat fund, a hedge fund, and a venture fund clubbed into one. So my mandate there was to invest purely in financial applications that we as a hedge fund or a market maker could use ourselves. So we've invested in everything from lending in emerging markets to automated market makers and very nascent early stage DeFi primitives. And yeah, that's a background on me.
Yeah. So great. Yeah, like that's very interesting that you. Yeah, since 2013 is certainly, very, very early in that. So like, my next question, is, so what I'll do now is maybe I'll suggest some topics, and then maybe we could see that, how we could all, contribute to that. So, like, just continuing on that thought, right? What do you see, like, how do you see the evolution that coming in from 2013, like, and what do you see the trends that are emerging now, like maybe going beyond 2020 was the 2020 was like when DeFi really came into the mainstream. Then we had the DeFi summer. Then over 2021 we have seen DeFi 2.0 emerging. But what do you see are the next emerging trends in the space? What do you think? Where do you think it's going?
So I think I'll give some context on how I think about it. I think all technologies initially are adopted by people who can afford to take the risk, in the sense that the early adopters are either people that are forced to use a new technology or they have the capacity to take that risk. So most of the folks that I used to see around 2013, 2014, they were people who had already made it elsewhere and they just wanted a new asset to have exposure to. Or they were like, in my case, I was under 18. I turned 18 around 2013. So for a good while I was unbanked, and Bitcoin was how I was banking myself from my internship income and all of that, right? So that used to be the case then. And then eventually there came this point where capital markets and crypto came together. So that's when you had the ICO boom. A lot of founders were using crypto as a way of raising capital globally and connecting with investors on a global basis. And actually that started off not in 2017, it started off in 2015 when you had, I think, a whole bunch of early stage ICOs were happening then. And then, it really reached its peak in 2017. So capital markets was the first major use case, I would think. And then came, what is basically art and gaming, right? Like, so through 2018 to 2020, you have the groundworks for NFT and gaming to take off, right? Although that market really matured maybe in the last year or so. People were saying, okay, I don't want to raise money, but how do I use this as an alternative to build new business models? And right now what I'm seeing is there's this huge influx of talent, especially from India, that's coming, that does not want to see this as a capital market product or a new business model product. They're looking for something that they can use on a daily basis. So it could be streaming music, it could be buying tickets, or having a bio link where somebody can send Ethereum. It's very day-to-day, daily purpose products that's coming. And I think the grand thesis for anybody that's investing in 2020s is to make the whole blockchain experience non-existent. So what does that mean? Somebody should be able to take a loan or send money to someone in the US, or receive payments without actually having to go through the whole, let me send money to an exchange, then do a bank transfer and all of that, right? Like, so there would likely be products that blend the whole thing into a simple experience, or there would be products that allow entirely new business models altogether. So I think Superfluid is actually a great example here, where they're saying, hey, don't wait till the end of the month to get your paycheck. We'll make it possible, for it to come faster to you. So I think you'll see two things. One is the experience improving drastically, and the second is new business models that address existing problems. So DAOs, instantaneous payments, property rights, all of this going on chain is really a function of that. That's how I see the next step.
Yeah, interesting. So at this point, maybe I want to see, like, if we can figure out what are the local trends. Like, how do you think DeFi can fit in with the existing infrastructure of the countries, and we can get some perspective. Maybe I think Chandresh and Joel, you would have slightly more perspective on India, and then maybe we can talk about Francesco's perspective, how he sees it in Europe, and Kyle in the US. So for example, like in India specifically, we have pretty robust infrastructure, fintech infrastructure in terms of UPI and all of these core things that are that are like that was encouraged by the government as such. And for daily purposes, like you can say that they have reached mass adoption, and they work quite well. So what do you think is, where do you think that DeFi fits in here? And what do you think will be the use cases that will emerge in specifically in an Indian context? Joel or Chandresh, either of you would like to. Yeah.
I'll just drop 2 points, right? Like, I think in the context of India, like you said, the benchmark is always UPI. It's not, so we have better fintech infrastructure than the vast majority of European countries, you can argue, even versus the US. So anybody that's building for DeFi or fintech in India has to compete with UPI, which again is to a certain degree endorsed by the government. So there is this trust barrier for you to cross. So that's the first thing. The second thing is India is a very cost-sensitive market. We on a per capita income basis, Indians do earn lower. So we're very cost-sensitive. So if you have an app that takes 400, 500 rupees or $6-8 per transaction, you by and large just discounted the largest user base you can have. And the third that I would say is, while we are cost sensitive, we are also high on risk appetite. If you look at the kind of charts and on-chain behavior that Indians do take substantial amounts of risk, so that so long as the upside is quite clear. Now, there is a broader conversation around financial literacy, potential Ponzi schemes, pumps and dumps and all of that. But I'm just going to keep that aside for the context for this conversation, and explain that, Indians would likely come on chain so long as the value proposition is very clear, and that value proposition would look very different for different market segments. So for somebody that is 60 and just wants to earn extra yield, let's say 8% with a small fraction of their income, not their total savings, that is one market subcategory. Another market subcategory could be a father that just wants to send money to their daughter in the US, and trying to get better exchange rates than what the banks offer. Maybe DeFi, as the markets get regulated, could likely offer that. The third, and I think this is likely the largest subsection, is this huge population that's looking for better job opportunities online, that is likely going to be banged on chain instead of the banks. So why? Because something like a TransferWise may take 48 hours or actually overnight to get it settled, whereas an Ethereum-based payment comes right away. Second is DAOs. Hopefully, this is an idealistic prediction. DAOs in the next 2 or 3 years could likely create more jobs than entire cities in India can, but while connecting with foreign economies. And third is the fact that there's a cultural angle. Like, young folks are likely looking not to run in the corporate ladder, but find an alternative way to build their career. And DAOs more or less have started filling that gap, right? All while not requiring somebody to immigrate all the way to a Canada or a US. So I think there is this convergence of workforces. I'm talking about the from the context of someone from India. I'm sure for somebody that's in the West, they are also able to access better talent pools and ensure that they are not really paying heavy transaction fees, while being able to do more frequent transactions, right? Like, again, I keep going back to Superfluid because it's one of those things I really think is changing how we think about work. Like, why would somebody wait 30 days to get their payment when you can actually stream it to the counterparty? So I think if you're building for India, you have to be very aware of 3 things. One is cost. Second is this bringing a new opportunity? And third is this appealing to specific market segments? Because what I see right now is people just building for broad customer segments who may not even care about it, because the traditional alternatives are actually better, more cost effective in some cases.
Right, makes sense. Chandresh, any thoughts on that?
Yeah, so but first of all, like then where you mentioned about UPI, so obviously when we go down so deep into the economy, there are definitely regulatory frameworks and regulatory approvals which are required. But so we are not to that stage as far as India is concerned at the moment, I would say. But one great thing about decentralized finance is whatever products you are building, you are ultimately building it for the complete masses. So you get to leverage on whatever talent pool is there which is available in the world, at the same time whatever customers who want to interact. When we talk specifically building out for India, so I see that on the infrastructure level also, I would see over the period of time we are getting there. There are so many good wallets which are ultimately coming out. So definitely there is a certain audience which are very comfortable and they understand how to interact with Web3. They are okay with maintaining their wallets and everything. But still there is a larger mass audience, I would say, which is still not comfortable in maybe interacting with MetaMask and doing all these operations. So definitely there is a layer on top of the current applications which I would say has to be built, or maybe over the period of time our dApps takes that route and becomes that the blockchain part sort of becomes invisible to that. And the other point also which I guess Joel also touched upon, that India is one of the economy where cost again is a factor. If we if we consider speed, but again cost is also a slightly factor which is heavily seen by the users. So I guess currently looking at the stage where other, apart from Ethereum, other L1s are also emerging, and a lot of the dApps are getting built on top of that. There is a lot of work which is happening in the phases of L2s. So definitely, I mean, we are getting there when everything is in the right position, and we get the clarity, more clarity on the regulatory front. I guess we will be there to sort of compete with or replace the traditional financial systems which are there in the place. Yeah.
Makes sense. Makes sense. This makes a lot of sense. I'd just like to touch upon just get some quick perspective before we move on. Any thoughts on how you see off ramps like evolving in India? Because the key part here is that, okay, like even Joel said, and Chandresh, like if the talent starts earning the money, right, through that, even through Superfruit and all, then the issue is to how to get it into your bank account. And to be honest, like even though 30% has been declared there, I'm not too sure how the accounting for that will work, especially if folks start doing most of their work on for DAOs. Any thoughts on that? Any interesting products you see?
Yeah, to be honest, like I am not expert. We have our different finance and regulatory team who sort of look deeper into that. But yeah, again, those are the hurdles which are definitely there, and we have seen like there are solutions in place where you can sort of get the money and you pay off whatever taxes you have to pay. But we have seen that over the period of time this kind of solutions are getting more traction. Like what we have seen previously, people were having different entity structures, and there was a way where the money was flown. But now they it has been replaced by some very innovative products which are being built on Web3. So I'm sure those people are definitely accounting the taxation part also. So yeah, I mean, it is becoming easier and easier to sort of work from anywhere and take part in the complete from completely from the regulatory perspective also. Denver.
Yeah, thanks for that. Joel, any thoughts on that? Any interesting?
Actually, I left India 6 months back, so quite frankly, I'm not very close to what the regulator is thinking. But I would say, just given how markets evolve, we would like to reach a point where the off ramp is just an API, and something like a Stripe is able to like say, somebody sends USDC, Stripe converts it to INR and sends it within the hour. That's going to be the most efficient version of the market that we likely have. But tax is a big component of it. I think it's in the best interest of the government to hold exposure to dollars. So maybe one of the ways that it could do is, stable coins are collected at a central place, converted to dollars and just held as part of the foreign exchange reserve. But these are all like 5-6 years out, right? Like, because I've been seeing the regulator take 7 years just to say, okay, 30% tax. I'm just very patient with the regulator, and quite frankly, I'm just like, let's give it time and see how things flow.
Sure, makes sense. So go on to Francesco. Francesco would like to ask you, what do you think about this? Like, how do you see DeFi fit in with the existing infrastructure in the locality where you're based in Europe? And
so actually, just want to make a note on India, right? So I was just checking the numbers, and there's a poll that says that 22% of people in the US have exposure to crypto, right? And just to put that into perspective, 22% of the population of India is bigger than the US, right? So if we can get, India to a point where it's at the same level of sophistication as the US in terms of crypto adoption, we've done a very good job, right? That's the scale is completely different. And I agree with what was said before about DAOs potentially creating tons of jobs. And I think it would be, a future I'd really love to see is a lot of those people getting paid through Superfluid, right? So we can, drastically improve their quality of life, get them paid every second. And as you said, that also gives rise to a lot of other financial products, right? Another thing that I think we don't talk about enough in DeFi is that all the financial products we've built in DeFi are stuff that people don't generally use, right? If you look at the kind of financial products that most retailers use, you're looking at mortgages, short-term loans, right? Insurance, things like cash advances, businesses will have business loans, credit lines. We haven't built any of this stuff in DeFi, right? We've built completely parallel stuff that is mostly serving capital markets, speculators, and trading, right? And I actually believe that the reason we haven't managed to build all this stuff is because we were lacking the basic primitive, which was on-chain revenue, right? Cash flows. If you don't have cash flows, you can't have credit lines, because how do you give credit to someone who doesn't earn money, right? So I think, with more of this activity coming on chain, with some of this activity going through Superfluid, we can then build these things that will impact people more directly than trading, right? Like, something I say very often is, not everybody needs leveraged exposure to CRV, but a lot of people, need to get a mortgage or, get an advance on their salaries. So there's a lot of opportunity to expand the scope of what we do in DeFi beyond speculation and build stuff that people need on the ground. And I think, as Joel was saying, very cost sensitive, right? So, we're deployed on Matic and XDAI chain because we think payments should be cheap, right? The moment payments are expensive, you go back to fiat because, how it works. It works quite well, right? But being deployed on layer 2s and scaling solutions allows you to reach that level of price where it can be interesting to an Indian market as well. So yeah, we're been speaking to you, Denver, for a while now, and we're very excited about Indian coders, Indian entrepreneurs. Very excited to see more people in India build for India, because it's such a big market that if you build a good consumer product that's integrated, that's compliant and can be used by your average person, they will use it and it will be very valuable to them. So I'm very excited to start seeing more kind of sophisticated user-facing products rather than kind of more abstract DeFi products, if you know what I mean. And obviously we are one of those abstract DeFi products, right? But then we need people to go and build those customer endpoints in specific markets. And India is probably the best market, right? Like, it's the biggest. very hungry population, a lot of interested, interested people, a lot of technical young people, right? So I think it's like a perfect market to go and build, a killer consumer-facing app.
Yeah. Oh, thanks a lot, Francesco. Can have Kyle for his thoughts.
Yeah, I wish I knew what the powers that be in the US wanted to do, let alone what they will do. And the whole world wants to know. But I will say that it's kind of obvious where the trend is going of, as Francesco said, a lot of people have exposure. They're more interested, right? A lot more people are interested, and therefore organizations will follow that interest. But you look at balance sheets, balance sheet capital, people are holding Bitcoin on balance sheets in general. I think that could continue to increase if the regulators don't shut it down. And I also see banks like me coming from traditional finance, where the interest is and where the money is to be made, companies will get that exposure somehow. But coming from Goldman Sachs or any other large organization, the bigger the ship is, the harder it is to turn at all, and the slower it is to turn, but therefore the slower it is to steer away from an iceberg, right, with an impending monetary crisis that we all probably see is a potential outcome. So with regards to regulators, with Biden's recent executive order, most of it was not super negative. And there was even one section that said they want the US to be competitive, which I think is good, which is kind of what they did in the 90s with regards to the internet technology in general. They let it build out, figure itself out, as opposed to squashing it. And I think that's necessary, because if the US doesn't do that, they're going to be screwed, and the innovation is going to go outside the US, right? That's already kind of happening in general. And we just don't know where that's going to be. With regards to banking and traditional finance in general and how that's going to play out, I don't see them adopting a lot in the near term. I see them maybe even getting to a spot ETF. Right now it's just futures ETFs. I'd rather get to a spot ETF on things, and then maybe getting into stable coins and doing some things like farming, which is essentially high yield strategy lending. But I don't see them adopting Yearn Finance into Goldman Sachs's high yield strategy. I don't see them adopting Alchemix with the self-paying loans, which is all stuff that I love figuring out myself. And that's great. That's more alpha for us. So I think if regulation comes in, it's going to be a dichotomy of, all right, these blue chips are regulated and they are going to innovate a lot less. It's going to be a lot slower innovation. They're just going to iterate just like normal banks. And then there's going to be all this cool innovation that happens around the world. And that's going to be the future. And this stuff just maybe slowly adopts 1/100th of whatever this innovation is. But I want to stay over here personally, because that's where the fun is. That's what's, pushing things forward. That's what's going to make this world better, not just becoming a bank. So I hate not to be able to answer, but we just don't know what regulators are going to do. But we do know that regulators are going to regulate, and they're probably not going to regulate correctly. So that remains to be seen. But in the end, DeFi started with Bitcoin, right? A peer-to-peer electronic cash system. And that's happening in the world with regards to El Salvador and other countries, maybe Mexico. And that's cool. But I think with the US dollar being the global reserve currency, being an incumbent and growing up with this archaic power structure that you need to hold on to, it's going to be hard for people in that system to let go of power. And that's what I think Web3 in general is, right? Decentralizing the technology stack and kind of decimating the power, decision-making, and ownership structures to give it back to people so they can, not be a product of these Web2 companies, not be a product of these TradFi companies, and actually own things and actually have the freedom to do what they want. So remains to be seen. I'm not sure, but I think it's exciting to watch.
Yep. Something, it brings me to a specific question for the US. Like, what do you think will drive the next headwinds of like moving to protocols, like true decentralized protocols, like for example, instead of using something like a Coinbase, maybe you use an actual DEX like Uniswap or some of the others. What do you think will and how far down the line do you think folks are in the US for where they actually the wind start shifting towards something like DEXs over like centralized entities?
I think it depends because there's a spectrum. I haven't been on an exchange for 2 years now, and I don't ever want to be on an exchange. Right now, I only need to if I want to on or off ramp, but that's not what I believe in. And I think there's a lot of systemic risk there. But there's most people that are just getting in that aren't going to learn to log into MetaMask, bridge to from one chain to the other, and stake and delegate and all this stuff. So there's still a big learning curve. And to answer a question of what the headwind is, if regulators come in, the easiest choke point is the on and off ramp, right? And I think regulation will come, not might come. And I think that could be a temporary headwind, short term, not even midterm, but building will continue on and innovation will continue on. I don't think it's going to shatter building in general because there's enough cool, smart builders with a lot of money right now that will just keep building through a multi-year bear market, as we've already seen. So yeah, I think that'd be the shortest term headwind, and hopefully they don't stomp out innovation, because if they do, it'll go somewhere else. But other than that, I don't know. We'll see. Besides a world war, which sadly isn't out of the question.
Yeah, that is. I think that was also somewhat of a wake-up call in terms of the need for such protocols as well. And also, I wanted to try and understand now. Start off with Kyle. To like, how do you see the trends emerging with the layer 2? What do you think is the biggest innovation that layer 2 is bringing in? And like, do you see any interesting trends there? Do you see more adoption?
Yeah, I love what's happening in the Web3 stack in general, to where this year feels like the year of Web3, to where things truly come to fruition and become decentralized. I love following layer 1, layer 2, and sidechain innovation. I've loved learning about and seeing the optimistic rollups happen and how that's been 10x or more speed and security. And then now I'm super excited about ZK rollups, zero knowledge proofs, with that practical algebra to increase privacy, to increase speed, to decrease cost. And that's close to manifestation, probably over the next months to quarters, with some really, really cool projects that still need some building. And you have different models, right? You have the Solana, where you stay in one shard and maybe increase composability, and you have the side chains like Polygon that are helping ETH. Then you have other layer 1s that are helping ETH, and then you have all these layer 2s. We don't really know where that's going to go, but I'm super, super excited about what optimistic rollups in the short term, and then zero knowledge proof ZK rollups are doing in the mid to long term. There's going to be some big innovations there.
Yep. Certainly very interesting. The layer 2 is going to be really interesting. I think definitely agree with you there. Francesco, any thoughts on how do you see layer 2 transforming it? Sure.
Yeah, I mean, in the short term, I think it's gonna be great, right? It's gonna bring a lot more, let's say, a lot more space to deploy, and it will relieve congestion on mainnet as well, which is obviously very important. But in the long term, what I think we will see is that, I believe firmly that if in 2 years we are still talking about gas prices, we completely failed, right? Like, I think with layer 2s and with side chains and things like Cosmos that make it very easy to deploy new chains, and things like Avalanche subnets, basically there's going to be an explosion in block space, right? Like, I think within the next 2 years, we're going to have 1000x the amount of room for things, for transactions, for contracts that we have now. And what's missing is not so much the more space, it's the connectivity, right? It's making the fact that, you have all these different cities, right? And you have houses in each city, but there's no roads, right? When those roads become really quick and you can transfer from one blockchain to the other in a very seamless way, and you can build applications even living across blockchains in a very seamless way, then basically the block space becomes one big, kind of infinite land of abundance. And that's where I think we'll be in 2 years. And if we are, then basically we have unlimited room to deploy anything we want, and everything is easy and cheap, right? And then, when everything is cheap, there's no competition anymore. Like, this just becomes the best place to build anything, right? And I think that's where we're going to get. Obviously, with different blockchains, with different trade-offs and different opportunities. Some blockchains might be for gaming, whatever it ends up looking like. Overall, I think bridges are almost more important than layer twos because they allow to expand beyond the limited space of Ethereum, right? Like, even just having better bridges with Polygon would be amazing. And I think we're getting there. I'm following very closely the kind of cross-chain space, and there's some really, really good developments. There's some people have cracked even, trustless bridging, which is obviously a very big deal. So yeah, I think that this is kind of the trend I would be following on. And as a result, while I'm super bullish on layer twos, I think in 2 years, we won't think as much about them, or I hope so, at least.
Interesting. I would also be very interesting to see how a cross-chain superfluid looks like maybe sometime down the line. Yeah,
it's going to be fun.
Yeah.
I do think we're going into a multi-chain, cross-chain world. We don't know what that'll look like. Bridging is super important. Some people say they've figured it out, but that's an important space for us to not only figure out, but also make it such an easy UI UX that it doesn't feel dangerous across the board, which it is, right? Some of the biggest hacks have been bridges, and that's recent hacks. So
yes, and in fact, yeah, and about the innovation coming in now, we have been seeing some really good innovation in specifically this area from India itself, building for the world. Don't know if folks are aware, but there's I think there's a team from India building a Google Maps for bridges, right? The Mover network, and amazing builders. Just a shout out to them. Call themselves Socket now, but I think this is going to be making the bridging experience very easy in the future. Definitely very interesting there. Right. Chandrish, what are your thoughts on L2s, and how I think you have like some very interesting perspective there, because you
what Francisco and Kyle said, I also totally agree that till now it seems like it is going to be a multi-chain world. We had solutions like Cosmos is doing a great job, Polkadot is doing a great job, but again I still remember those early days in 2018. We used to talk about how CryptoKitties came and the Ethereum network was congested, so there is a need of L2s. Then again we came to the point where a lot of L2s got traction. So currently I guess around 40% of the TVL has moved out of Ethereum currently, and it is sitting on different L1s and L2s which are there in the space. But still, we haven't figured out that which is the best solution. I still feel like there is a lot of innovation still happening in the layer 2 space, and there is a lot of testing still happening in the layer 2 space. If we talk about, we are still seeing that on multiple chains, different types of hacks are still happening. Like one of the protocols was recently got compromised on Genesis chain, and that was because of the implementation of how they have done one of the folk of Aave recently got, hacked. So again, it seems like it is going to be a multi-chain world, and a lot of innovation and testing is happening. So again, bridging becomes very important. And like you, pointed out, Mover, they are building a bridge aggregator, doing a good job. There is a team named as Router. I mean, so many different teams are doing a good job, but still, we are not, we have not reached to the stage where we can say, okay, this particular L2 solution is going to work. But what I would also like to highlight, even though that, currently on the Ethereum chain, the gas fees is still on a, very lower side, but it keeps on, changing. So I have seen that, one of the protocols named as WhatsApp, they are building a decentralized AMM just like Uniswap, and they are reducing the gas fees by around 60 to 90% for doing the trading, and for providing the liquidity operations. So certain this kind of innovations are needed in the space, which are ultimately making more space in the block for other operations to happen on Ethereum itself. And yeah, I feel like maybe down the line, 1 year, 2 year, we will be we will we will be at a stage where bridging will be very simple, and at the same time, users will be operating on multiple chains. I guess it is going to be a multi-chain world, I feel.
Interesting. Joel, any thoughts on layer twos changing the DeFi landscape?
So I think we're seeing through the lens of somebody that's deeply in the industry right now. But if I go to my mom and I say, hey, I think you should start doing transactions on Optimism because it's low cost, she'll be like, what are you talking about, right? I think plugging back to what I think Francisco said, 2 years from now, if you're talking about gas prices, we've all failed. I think it's highly likely that we do talk about gas prices 2 years from now, because in 2019 we had people saying the same thing. But to get at what I'm trying to say, I think yes, cross-chain innovation and multi-chain innovation is interesting, but until we find a way to get it beyond the complexities of the industry and make it something relatable to the end user without worrying about bridges getting hacked, about slippages, about rug pulls and the like, I don't think any of this would matter, because the end user does not have time for games, right? Like that's how I'd say it. And I think that's one thing that's very different from 2017 to 2022, and maybe from 2022 to 2030, because what we're seeing is there are equity-based firms that are using blockchains to build massive value. So, OpenSea is one example. It's equity owned, but hey, they build a massively successful business. And I think given how markets work, it's likely that we see transaction networks that are on layer 2, but the end user does not know that, hey, there is a multi-chain or a layer 2 component to it. And I think teams like the ZK Stark are already branding themselves that way, right? Like they don't want the end user to know that, hey, this is what's going on in the backend. So what I'm trying to get at is, maybe as industry participants, we should just zoom out a little bit and just think, does this actually make sense if I give it to somebody to just play around with, and they didn't have the mental bandwidth to really invest in it for hours and such. And whoever does manage to do that is going to build an incredible product. And there are examples already. So MoonPay network, I think it lets you send USDC, it lets you go from credit card to sending someone USDC across the world on a layer 2 in a matter of seconds. I think Argent already has USDC enabled on its layer 2. A lot of Indians love Solana because sending USDC on Solana kind of feels like Google Pay when the blockchain is working normally, right? With that caveat. So I think it all boils down to user experience and how do we abstract away complexity. But before we get there, obviously you need the tech to evolve, like Chandra was saying earlier, and that's that. So props to all the great teams that are making that happen.
Cool. That would be a really big shift. I think it's the same way, the difference between like when email came about, right? The difference between is not like it's you can definitely transmit a message across using like physical telegram as they did earlier, but email, and then just change the whole game. And that brought about like an entire new way of thinking. It was a paradigm shift. So I do think, maybe we hope to see something like that with the speeds that either L2s or alternate L1s they get they bring to the table. That would certainly be interesting to watch. And I think now we are almost at the end of our panel. We do have some questions. Maybe is something out of these questions is something that pops out to you. We might not have time to answer each one of them, but then if there's something that any of the panelists would like to pick up, happy to do so.
Yeah, real quick, we touched on banking already, but the first one, how DeFi is changing banking in general. I just think that's how Web3 is changing the internet in general. So it's increasing verifiability and transparency, which would have been incredibly important during something like the financial crisis, when ratings agencies were spitting out crap data, when Enron was putting out fraudulent information, and Bernie Madoff was just saying, trust me. And that there's a lot more things, but all of that is dependent on a decentralized tech stack to where no one owns the servers, no one controls the data, no one can shut someone out, change information arbitrarily, and just play these oligarchical kind of dictator games, even if with a nice mask on. So I think a decentralized tech stack is truly changing primitives and paradigms across all verticals. DeFi is one vertical, and it's super exciting to think that, over the next year or so, this is like a true reality to where things can't be shut down, people can't be blocked. And I think that's very important for the world.
Yep. Yeah, for sure. Sure. So that is there anybody else who would like to pick up any question? I think we addressed most of them.
Someone was asking how they can build on Superfluid at the hackathon. And yeah, I mean, there's a ton of ideas on our website. You can go to hack.superfluid.finance, and there's like a collection of ideas ready to be built. And there's also a link to our Discord, which is the best place to connect with the team and get anything else.
Yep. Yeah, that actually brings me to the final question that I'd like to ask all of our panelists, since we are definitely in a hackathon, and it's very important to know what to build. So if there's some particularly cool idea that you've thought about or you wished was there, somebody built it, would love to hear from all of you on is there something in particular that you would like to see built in this hackathon? We'd love to get some hack ideas. Like, since we are already on Francesco, maybe something, a cool hack on Superfluid. Any ideas there?
Well, stuff I'm always excited to see is anything that involves credit or somehow cash flow securitization of some kind. So imagine you have a salary, right? If you're receiving a salary, you can now borrow against that salary. You can get a cash flow advance, or maybe you could even sell part of your salary, right? Maybe you find an investor who wants to buy 10% of your salary for whatever reason, you can sell it to them. And this is the same for businesses, right? So you say salary, but it could also be revenue for a business that's charging in subscriptions, right? So one thing we're very bullish on, and we're starting to see, I'm very excited. We're actually paying some of our suppliers now using Superfluid, and those suppliers now have on-chain provable cash flows. So they could take those cash flows and borrow against them, or securitize part of their income and sell it to investors, or even create other debt instruments like bonds, where the repayment is done in a stream. So let's say I'm always very excited about anything that combines cash flows and credit, because there's a huge kind of variety of different applications that you can build. both kind of more on the crypto native side or on the more kind of real world use cases side?
Sure thing. Yeah, I think it's a pretty neat set of neat starting point to have, especially the on-chain provable cash flows. That really stands out to me. Thanks a lot, Francesco. Chandresh, any?
Yeah, so actually, we already have one bounty running for Uniland Finance. So Uniland Finance is built as a base layer protocol. On top of that, currently, we have a bounty if you are building liquidation bots on top of our protocol. But apart from that, there are so many other ideas also, like ours is a permissionless decentralized money market. So we are accepting any asset as a collateral. So we have been, getting a lot of questions in the community. Can we use NFT as a collateral? So that is something which can be built on top of Uniland. So we also have, a separate $1 million grant running from Uniland team. So if anyone is interested in building on top of Uniland, or you have, any other idea, you can definitely reach out to me also. We can brainstorm together. But yeah, if anyone is down for building, NFT as a collateral on top of Uniland, we will be able to provide all kind of support to the team, ranging from the technical support, funding, everything.
Yeah, cool stuff. NFTs. Yeah, NFTs as collateral sounds very interesting, and I'm sure we'll see some cool hacks being built on that. Joel, any thoughts? Any hack ideas?
Yeah, I think it's not really a hack. It's a very simple product. There's these bio pages where you're able to send Ethereum right now. But I think if you can make a simple product that uses Coin DCX's APIs and allows people to instantly convert that into INR and get it in their bank account, I think that would be pretty cool. The only thing is you should also account for any tax as TDS and leave it in the account, or just find a way. So basically what it does is, it's like buy me a coffee, but on crypto, right? And you get the money directly in your bank account. I think there's definitely a market for that right now.
Yeah, I think that ties in very well with our discussion earlier about off-ramps. Very, very cool. Hope to see that being built. Kyle, any thoughts?
Yeah, we're building a lot of stuff in real time. That's, there's already a lot of building that's gone on, but it'll over the next couple of quarters, there's stuff that will come out that will kind of change the landscape a lot and make it a lot easier for folks. I'd say I posted a link on existing bounties. There aren't too many in there right now, but usually there's dozens, anything from dev tooling, cost calculators, cross-chain composability. I think composability is the biggest factor that we all need to work on, and we're working through all this internally. But the more people come in, we have a lot of hackathons around the world. If you're interested, just ping me, Kyle A. Rojas in Discord, and I'll link you to all of them, and hopefully you can attend everyone. A lot of building to be done though.
Yeah, sure. And we're so excited for that. And with that, that's the end for our session today. And thanks a lot to all our panelists for joining, and hope all of you attendees had something to gain from the session. The session is also has also been streamed on YouTube, where you can go and check it out. And do share it with anybody you think it would be relevant with. And thanks a lot, everyone, for joining in.
Thanks for having us, man.
Thanks, Denver. Bye-bye.
Later, guys.
Nice. Good luck with the hackathon, everyone.
Bye.